Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Wednesday afternoon. I'm Juliette Sarli. Great to have your company on a day where once again Santa has not shown up. The Santa rally, when is it going to happen? We are down about 0.1% there on the SIBO 200. When it comes to the ASX 200, we did have deeper losses than that, particularly around 11:30, but we finished lower by around 0.2% at 8,579. Of course, we'll see where we go in the match off, but a lot of weakness today coming through, of course, as you would expect from those energy players. We've also seen healthcare coming under pressure as well. A bit of a switch out of some of those defensives. In fact, the only sector moving higher today was the mining sector. So getting to the overall themes of the day, we certainly were dampened somewhat by data, that US jobs data. We also had some weak China data out as well. Investors very much waiting to see how much more likelihood of further or deeper cuts from the Fed. Oil also falling to its lowest level in almost 5 years, being a bit of a dampener too. We also had MYEFO, the mid-year economic outlook, so that 2025-2026 outlook by the government projecting just a small improvement in the budget deficit. An underlying deficit of around $36.8 billion is expected though. Somewhat of a minor lift though. I mentioned the materials sector was firmer. Iron ore futures ticking up for a second day, even though we saw that data signalling weakness in China's steel demand. And JP Morgan upgrading their outlook for lithium, citing higher demand forecasts and widening near-term supply deficits that are expected here, they think, to support higher prices. I spoke to Jared Rubin from Blackwattle earlier today as well, and he also thinks that lithium is where you should look in 2026. He mentioned a specific stock on his radar. You can find that at ausbiz.com.au. And no more cuts. I mentioned earlier in the day that we're just getting a flurry of these economist updates coming through in terms of economists really changing their interest rate forecasts for 2026. This morning, Westpac now saying that they do not see any move in 2026. So remember earlier they were still forecasting a cut. So you've now got the NAB and CBA predicting that we'll see an interest rate hike from as early as February. NAB's got 2 hikes penciled in for the first half of 2026. Westpac now saying no cuts, along with ANZ and AMP as well. Deutsche Bank not expecting anything either. Phil O'Donoghue told me that he thinks rates will remain on hold at 3.6% in 2026, and of course that the governor will use some of that jawboning similar to what she did in the press conference following the last meeting to really maybe try and get us to cut back somewhat on our spending. All right, let's have a look at what we're seeing in terms of some of these moves in the materials space. Gold stocks looking very solid today. Northern Star up 3.5%, Evolution up by almost 4%, Ramelius there up 3.5% as well. I mentioned the outlook for lithium and PLS, not giving anything away, but maybe that was a stock that someone had on their radar. It was up 5% today. But the energy stocks, of course, lower. We've got global oil prices at their lowest since February 2021. These ongoing jitters surrounding oversupply and the prospect of a Russia-Ukraine peace deal really weighing on the overall crude market. Woodside Energy, they're down by more than 2%. Some of the other company news we're following: Treasury Wine, it's at a near 11-year low. It's cancelled its share buyback. It's had a pretty bleak outlook. Shares down more than 10%. GrainCorp also slumping on a lower annual harvest forecast. South 32 down around 0.75%. It's going to place a Mozambique aluminium smelter under care and maintenance. Santos as well, also saying its PNG LNG joint venture has fully repaid its project finance facility. And Star Entertainment getting another boost as we heard that Bruce Matheson Jr. will become the new CEO. Also, Hum Group, one to watch, up almost 11%, and this is Credit Corp lobbed a takeover bid for the fintech, offering a scheme arrangement of 77 cents per share or an off-market takeover at 72 cents a share. All right, let's welcome to the COB our guest, Luke Winchester from Merewether Capital. Luke, great to see you. Why do you think we're not getting the Santa Claus rally? It just doesn't seem like it's coming just yet.
Yeah, look, I think bond yields, Juliet, I think is the short answer. Have seen that large spike in particularly the Aussie bond yields, given our sticky inflation and jobs data still holding up okay. I know you just mentioned all the economists now sharpening their pencils, and not many have a rate cut factored in anymore, and a few brave souls are calling for a hike sometime next year. And seeing that flow through to the financials, they obviously drive our market a lot, but we're seeing a lot of pain at the minute is exactly what you saw through 2022 as interest rates rose as well. And that's those high PE, high growth stocks, which inherently rely on those long dated earnings. And as interest rates go up, then the valuation of those go down. So the market's looking around. I don't think things are that bad where people are hoarding cash and moving to the sidelines. And I think that's why you're seeing this rotation into materials. I think people are looking at financials, high growth industrials, struggling to get enthused about them. We don't want to hold cash. Where can we go? Commodity prices are still okay, and materials are benefiting from that rotation. So I don't think we get a Santa rally. I think we just see this continuation of almost a rotation among the sectors, and the market just chopping along for the next couple of weeks, and probably into the first month or two of the new year until we get some trading updates and things like that as we approach half year reporting.
And speaking of trading updates, I mean, Treasury Wine was one today. What do you think of some of the issues here, and I guess what really means in terms of maybe management having to come in and clean the house a bit too?
I mean, we're a week out from Christmas, and right now, no news is good news. If you see the words trading update now, like you get the feeling of the pit of your stomach, because it's not going to be good news a week before Christmas. We had GrainCorp Treasury Wine out today. Look, it's a mess, and I think it's a tough one for investors. I think you said 11-year share price lows for this one. It's a few factors going against them. There's some company specific issues they have to work through, but more broader than that, this is an industry-wide problem. There's a supply glut of wine, and for whatever reason, the consumer, preferences towards alcohol in general, to be honest, not just wine, has really changed over the last few years. And so companies like Treasury Wine have been left trying to right-size their operations, right-size their supply, and get their pricing and their branding right. I think, from a new management point of view, the strategy that I think the market's wanted for quite some time, it looks like it's probably still the right one. I saw that update today, and Penfolds continues to do okay. So I think you'll see increased pressure from the market on new management to try and really unlock the value of that Penfolds business. The hard part is they only made that big acquisition a year or so ago of the Dow, I think it's pronounced, assets over in the US. So not a surprise whenever you get a new management team, new board come into a business, they usually take that opportunity to really clean the decks, kitchen sink a result, get all the bad news out at once. I think that's what you're seeing here today with Treasury Wine, and it's probably why share price is off a little bit, but it's probably not the reaction you'd expect, because I think this is the market now acknowledging new management, new strategy. We're probably seeing the rebasing now of expectations, and hopefully better things ahead.
Speaking of new management, Star Entertainment as well. You said maybe they're shifting the chairs or shuffling the chairs here on the Titanic.
Yeah, it feels like that way. But look, I mean, if you're a long-suffering shareholder here, I think one of the things you can take heart from is the people now stepping into this business are highly aligned alongside you. Obviously, Bruce Matheson and his son own a lot of shares in this business. And the new chairman who's come in today is a representative of Bally Entertainment, who was that strategic shareholder that injected $300 million not too long ago. So, you've now got people who are financially incentivized to really turn this ship around. We'll keep that Titanic metaphor going. Look, this is a tough one though, and the difference here, I mean, Treasury Wine, its balance sheet isn't perfect, but it can sort of work through its issues. Hopefully, if it gets that operations turned around, it's the balance sheet of Star Entertainment that I think really spooks people, and it's why that equity valuation. I'm a micro cap investor, and it's nearly falling into my universe. Sort of sub 300 mil, despite being such a big operation and a big business, 8,000 employees. It's because so much of that leverage is now on the debt side of the ledger of this business, and they sort of need to clean that up. It's a tricky one, but again, I think you take heart if you're an investor, because you've now got people know the business. Bally's owns, I think I read 18 casinos over in the US, know the business, incentivized alongside you to turn this around. But as I sort of commented as well, I think this is one that probably gets worse before it gets better. As Treasury Wine's that example for us today. New management comes in, takes them a while to get their head around exactly what's going on, what we need to do. then you kitchen sink all that bad news at once, and hopefully that's the trough, and then things improve from there. So, I think there's things to be optimistic about, but I think it does get a little bit worse before it gets better.
All right, what about lithium? I mean, that obviously had a great session today. There's all these big calls out there. I mean, we know you look at the smaller end of town, but is there any lithium players that you like at the moment?
Oh, look, I've always favoured the guys that are in production and making money. You've got such a volatile commodity. I think you should be looking to gravitate to those at that lower quartile of production and are able to scale up. If you've got a stable commodity price, you can sometimes bet on these smaller guys coming into production and getting that. But the lithium price obviously bounces around. Not a space I'm playing in day to day. It is quite volatile, and I think you've got a commodity price that, for lack of a better word, is still buffeted around a lot by the rhetoric out of China and what they're doing with supply and obviously refining as well. But nonetheless, after a few years in the wilderness, I mean, this is the cycle of commodity prices. The lithium investors, the people who hung around from the highs a few years ago, it's been a very long time in the wilderness. But cycles turn, companies come back, and I think you're seeing those rewards. Your Pilbars and your larger players who have that established operations can survive that sort of winter when the commodity's out of favour. Starting to do quite well now on the upside. So not a place I'm playing in, but as I said, I would always favour those that are in production and at that lower quartile of all-in sustaining costs.
So Luke, I guess only a handful of trading days until Christmas. Do you think Santa is going to come?
Like I said, I mean, we're in a market that's so momentum driven, and I don't see any catalysts between now and the new year to sort of change things. And right now, the momentum is selling financials and sort of technology stocks and rotating into materials. So if I had to put my money on it, Juliet, I would say that things probably chop along at an index level. But underneath that, I think materials probably continue to do okay, and we see things drift lower in those other sectors. And then hopefully, because I don't play a great deal of material, so I'd love this regime change. Hopefully in the new year, everyone comes back from break feeling refreshed. We generally start to get a few trading updates, quarterly reporting season for the smaller companies as well at the back end of January. And that's usually fundamental news is usually the catalyst for people to then get a bit more confidence of where earnings are going and where share prices will ultimately follow. So fingers crossed. I'm more looking out to the new years. I'm not banking on a Santa rally, unfortunately, this year.
All right, Luke, we appreciate all your insights. Have a great Christmas. We'll see you in 2026. That's Luke Winchester from Merewether Capital. Getting back to stock specifics, the stock of the day on the call was Life 360. Nadine spoke to our experts, Michael Gable from Fairmont Equities, Kai Chan from MPC Markets.
I think it's at about fair value, but in terms of forward-going momentum, this stocks has always surprised me a little bit because in terms of growth and leveraging AI, I don't really think it's directly benefiting from that. There's probably other better picks that, in the tech, both the Aussie tech space as well as in the US that are better options if it was in my opinion.
And I'd still say it's a sell. I mean, you might get some bounces along the way, but the chart needs to do a lot more for me to want to get in. And I mean, in terms of, why is this the case? As you mentioned, Nadine, just, in the past 6 months, we just haven't had a lot of enthusiasm for local tech stocks, whether it's 360, Technology One, WiseTech, Xero, et cetera. So are they being unfairly sold off? Look, I think some of them. I mean, if that whole sector was to find some support, would I go back into 360? Well, to be honest, part of the business does worry me a bit in that it just feels as though other competitors can come in fairly easily.
All right, a down day on the market, but let's have a look at some of the leaders in today's session. And of course, we touched on those lithium players. Liontown, they're up by almost 11%. Gold also looking good today. The laggards, though, in today's session, well, we touched on GrainCorp there coming through with a trading update. DroneShield giving back a lot of yesterday's positive gains, down almost 13%, and Treasury Wine Estates as well, down by some 10%. Telix I believe there may have been a broker note about that today as well, which, Citi, saying this Telix sell-off has been driven by sentiment, but they actually reiterated their buy for the stock. In the small end of town, Comet Ridge up by an impressive 22%. I think Andrew spoke to them. That's that movement into, of course, Santos, I believe, Metal Powder Works, Marmota, KGL Resources and Peninsula Energy. To the downside, these stocks did not have a great day, including Radio Farm and Vinyl. Tonight, we get EU final inflation print and also an inflation print coming through from the UK, while one of the FOMC members, Waller, is due to speak about the economic outlook at Yale University. Tomorrow, New Zealand GDP, it is expected to pick up, though, by around 0.9 of 1%. Also, the Melbourne Institute inflation expectations and some of the prints for the overall GDP, finance and wealth for the September quarter. And a couple of AGMs, including ANZ and Elders. Let's recap where the local market has finished the day's session. Only marginally lower there on the CBO 200, but the ASX 200, I do believe, has had a bit more of a weaker finish, although it recovered a little bit on the close there. 13 points lower, around 0.2%, 8,585 points. We will do it all again tomorrow from 9:45 a.m. Eastern. We'll see you then.